S&P 500 Emini futures. This is an update for July 5th. We're up currently 0.38%. We're now looking at the 4-hour candles. Each one of these bars is 4 hours. This is yesterday while most people were barbecuing or partying during Independence Day in the US or in other places where we had quite slow trading days. This jump in almost 1%, 0.92%, was in light of the futures markets as they were influenced by the Asian market, the European markets. And today we'll see at the US Open, at the open of the standard market hours, where things will take us. Things are, our bias is still bullish for whoever saw our update for the NASDAQ futures yesterday. And here we have this double bottom area at the around the 3740, 3750, or 3750 area. This is a nice bottom, double bottom, which is also a little bit under the red line, which is the POC for this range. And if we would draw Fibonacci here, this would be also a level that is relevant for a possible rebound after retracement. So we had this jump up, this down, and we might now also be continuing up a bit, might be going something like this, but we should also check, or we're looking good to check the high of the range uh, at at 3950, 3,950. For today, those that want to trade and take positions and find possibly comfortable entry positions and comfortable or responsible stop losses, they can consider something like this. If I can find the long position, there it is. So I would consider this might retrace down a bit. Okay, that 3842 currently, it might retrace down a bit. If not, we're missing our entry. So this is the price of trying to find a lower entry point. There's no free lunch. We always pay a price for something. When we go for high risk versus reward, then we pay a price of probability. Our probability of winning the trade decreases, and vice versa. And here, if we wait for to fill a buy order at a lower price than the current price, the risk that we pay or that we have is that we will miss that trade, of course. And the experienced traders know exactly what I'm talking about, but we'll still try to fill a more comfortable entry price. And I'm looking at the small pivot point, the high of 1st of July, and that is at 3833.5. And I'll be just going a little bit above it, okay? Because other algos and other traders are also watching that high, so I want to fill in a little bit above it. You could also try to fill in a little bit lower than that, but since we had a good push up, there might be continued buying pressure. I want to fill it a little bit lower than that. And now there's a few possible trades here. One, the more, the safer one or the less risky one is to put a stop way below this low of 3741 and targeting the high of the range. But then the reward versus risk is not so interesting. It's about one, which is not good enough usually. Because if you make a lot of trades and go for a reward versus risk, where the risk and the reward are equal, it's usually a hard strategy. You could go for a 1.7, okay, or a 1.6, risking 1.68 and having the low below the POC, the point of control of this range. And that's legitimate. That I think balances between the probability of winning that trade because if the 4 hour candles close below this line, then it's a bit of a problem for the bulls. I mean, the premise kind of changes. We shouldn't really get there if we're staging a rebound here on the 30th of June. Uh, the more aggressive ones or lower time frame ones can go put a stop under the high of this 22nd of June, so under 3805 and under the 3800 or 3800 round number, which is also a bit of a magnet, and they would be risking 1.03%. And let's say they go a little bit more down than those higher or that higher the range, they would get a 2.5 reward versus risk, which is not too bad at all. And if they go for the classic reward versus risk, which is usually 2 to 1, then their take profit would be at about 3913. Okay. So to summarize, a trade to consider, and again, please understand the logic of and the areas of these prices that I mentioned, and don't go exactly on the tick and trade at your own risk and choose your own style. This gives you an idea, and I explain why it's not just throwing numbers. It's choosing the take profits and stops according to the to the chart and to the logic that I see here in my humble opinion. And please adjust it to your style and your understanding as well. You can draw these on your chart as well, or you can just go close to what I mentioned here if you would like. Here, the entry price was at 3834.5. The profit at the 2 to 1. Okay, let's make it exactly 2 to 1. Okay, there we go. The profit is 3913.5 and the stop is at 3795. Those were the numbers that I suggested for this trade idea. This was the technical analysis update for the S&P 500 E-mini futures for the 5th of July. Trade at your own risk, and thank you and good luck.